Hello, everybody. This is Bennett Tchaikovsky, the accounting professor. I want to welcome you to another question walkthrough we're going to go ahead and do momentarily. This is cost volume profit, where we are trying to achieve a desired after-tax profit. Presentation is copyright 2024 by Bennett Tchaikovsky. All rights are reserved. This may not be distributed or redistributed without my express written permission. So let's go ahead and get to it. By the way, any opinions or content is that of myself, not my employers or any other related entities, including but not limited to Irvine Valley College and the South Orange County Community College District. So let's go ahead and take a look at this question. So we're going through and we're selling inventory for 1,000 per unit, and we have variable costs of 400 per unit. Assuming that the fixed costs are 300,000 at an income tax rate of 25%, how many units do we need to sell to achieve an after-tax profit of 450? So what I'm going to do here is when we do these types of questions, a huge mistake students will make is that I oftentimes will give them these ratios, right? And I'll basically give these to them so they have them. But really, when we're going through and looking at this, you want to make sure that the work is right. So if we look at a contribution margin income statement or a variable costing income statement, really, what are we doing? Well, we're saying that our sales less our variable costs is going to give us our contribution margin. We then go over here and we have less our fixed costs. And this is potentially going to be going through and giving us our net income before income taxes, less income taxes. And this is going to give us our net income after tax. And just one moment. And so the best way to kind of go through and set up these questions is we have our units being sold, the per unit, and then the total. The reason why you want to go through and do it this way is because if we look at this as a formula, and I can say that, well, A times B, and if we call this our sales minus our variable costs, okay, and then we have DD. And this is essentially the formula we're going to be going through and using basically for these questions. So let's go through and put in what we know. So we're selling inventory for $1,000 per unit, and we have variable costs of 400 per unit. And again, I'm just putting this into plugging this in. When we go over here, and then I say to myself, okay, I don't know. I'll be able to figure out what the contribution margin is. However, we know that our fixed costs are 300,000, and we know that our desired after-tax profit is going to be 450,000. And it's now asking us to go through and to prepare a variable costing income statement, which is what we're doing right now. So with this all being said, let's go through and try to figure this out. Now, I know that my net income after tax that I'm desiring is 450,000. My fixed costs are 300, my variable costs are 400, and my sales are 1,000 per unit. Well, this must mean that my contribution margin per unit is going to be 600. Sales per unit minus variable costs per unit gives me my contribution margin per unit. We don't know our units yet because we need to figure out what this number is. So, but we do know that we have an income tax rate of 25%, and we're trying to achieve net income after tax of 450,000. So if I call our net income before income taxes Z, and I call my income taxes, which is at a rate of 25% or 0.25 of Z, I can say that, well, Z minus 0.25 Z equals 450,000. Or I can say 0.75 Z or 1Z minus 0.25 Z equals 450,000. Z is going to be equal to 450,000 divided by 0.75, or Z is going to be equal to 600,000. Okay, so if I do this, and I don't know if this is right, let's make sure that it is. It should be. So my solving for Z, right, my net income before income taxes is $600,000. Very important to do this. My income taxes are going to be 25% of that amount. Therefore, when I take my net income before income taxes of 600,000, I subtract my 150,000 of income taxes. This gives me to 450. So I know I've done this correct. Similarly, over here, my contribution margin minus my fixed costs, and we'll just call this Y minus 300,000 is equal to 600,000. That must mean that my contribution margin should be 900,000, because 900,000 minus 300,000 is 600,000. So the numbers here, my contribution margin is 900, my fixed costs are 300, gives me my net income before income taxes of 600,000. Minus my income taxes gives me net income after tax of 450. So coming over here, the number of units I must have sold because of this relationship up here. The number of units times the per unit equals 900,000. That must mean if I take 900,000 divided by 600, I'll get the number of units. And over here, that must mean I must have sold 1,500 units. Make sure you do the math. 1,500 times 600 equals 900,000. Now, the rule is over here, if we have a contribution margin for 1,500 units, we must have had 1,500 units of variable costs, and we must have had 1,500 units in terms of sales, right? So coming over here, my sales must have been 1.5 million. My variable cost must have been 600,000. And boy, oh boy, 1.5 million minus 600,000 gives me a 900,000, which is less my fixed cost of 300, gives me my net income after taxes, less my income taxes, gives me net income after tax. Now, for this type of question, could we have gone through and used these different ratios? Well, the answer is sure. You absolutely can go through and use these. And in fact, if I wanted to know what my dollar sales would have been at the target pre-tax income, if I take this over here, well, my fixed costs are 300,000. My target pre-tax income, net income before income taxes, that means pre-tax, 600,000. This means 900,000. And if I divide this by my contribution margin ratio, what's the contribution margin ratio? Well, my contribution margin ratio over here is basically going to be my contribution margin per unit, or 1,000 minus 400 or 600. And then I basically take my contribution margin ratio is my contribution margin per unit of 600 divided by my sales price per unit of 1,000. This over here would give me then 60%. If I take the fixed costs plus the target pre-tax income divided by the contribution margin ratio over here of 0.6, then you're going to get 1.5 million, which is the result we got here. Now, I know you can use the ratios, but I'm going to really strongly suggest that when you're doing these questions, just to make sure that they make complete and total sense, what I would suggest doing, or as a way of double or triple checking your work, is to build this, right? Build the contribution margin income statement. It's going to make your life a lot easier. Okay, so that is our first question. Now, down below over here, using the same information above, we're now going to have some changes. So let's go through over here and let's see what is being changed. Okay. So we're still going to have the same format, right? So using the information above, assume that sales price per unit decreased by 10, variable costs increased by 25, and fixed costs decreased by 100. How many units need to be sold to achieve a desired after-tax profit of 600,000, assuming a tax rate of 25%? A lot of information there to go through and unpack, but let's go through and put in the information we know. So it says over here that my sales price per unit decreased by 10%. Well, my sales price before was 1,000, right? So my sales price over here was 1,000. Well, my sales price old, I guess my video has stopped. Sorry. Maybe it's working. I don't know. Okay. Well, you don't get to see me anymore. Promise you I'll still continue to do the video. So coming over here, right, my sales price is 1,000, right? It decreased by 10%. So less 1,000 times 10%, or same thing as saying 100. So my new sales price is going to be 900. Now, what's another way I could have done this? If it decreased by 10%, it means it must have been 90% of the original sales price. So my per unit for my sales is going to be at 900. Now, for my variable costs, right? My variable costs before were 400. It says over here that my variable costs have gone through and have increased by 25%. So a couple ways I can do this. I can multiply this by 1.25 and I get 500, or I can say 400 plus, if it's increased by 25%, 25% times 400 is equal to 100. And then over here, right? So now I've got 500. Another way you can go through and do it. So now my variable costs over here are going to be 500 per unit. That must mean that my contribution margin for this particular question must have been 400 per unit. Now, my fixed costs, it tells me they decrease by 100,000. Well, if my fixed costs previously were 300 and they have decreased by 100,000, that must mean that my new fixed costs must be 200,000, right? So fixed costs decrease by 100,000. So that means that 300, which is my old number, minus 100,000 gives me 200,000. Now, the rest of this question is kind of the same thing we were looking at previously. My net income after tax, I'm now desiring, is 600,000. So my net income pre-income taxes, right? So we're going to use that same formula. We're going to say that ZZ minus 0.25 ZZ is equal to 600,000. So that means 0.75 ZZ equals 600,000. ZZ is going to be equal to 600,000 divided by 0.75, or 800,000. How do I know if I've done this correctly? Well, if I take 800,000, I multiply it by 25%, I get 200,000. 800,000 minus 200,000 is equal to 600,000. Now, when I look at this up here, what must my contribution margin have been? Well, the contribution margin minus my fixed costs gives me my net income before income taxes. So if I call this AA, or I call this AAA minus 200 equals 800, that must mean this number must have been $1 million. So my total contribution margin must have been $1 million. So now that I have this part over here, given the relationship, right, over here of these different items, meaning my units times the per unit gives me the total, that must mean I must have sold 2,500 units. If I have a contribution margin for 2,500 units, it means I need to have variable costs for 2,500 units. It means I need to have sales for 2,500 units. If I go through and multiply this through, I get 2,250,000 minus 1,250,000 gives me $1 million, less my new fixed costs, right? Because they're no longer 300,000. They decreased in this example by 100. Gives me net income before income taxes of 800,000, less income taxes of 25%, gives me my net income, my desired net income of 600,000. So I apologize for my own video going out on me. I'm sure it's because Zoom is requiring me to go through and do an update. So in any event, thank you for joining me here today. I look forward to seeing you on future videos, and just give me one moment. And I want to thank you for being here today and joining me as I made this video. If you have any questions, please feel free to leave them below, and appreciate your liking and subscribing to the channel, and have a great day.